In terms of capital, what's interesting, and as we all know, the last couple of years have been really dominating by the French investors, so notably the insurers and also the French retail investors. And this is the first year where we see that overseas money, so notably the US and UK money, is coming back, maybe due to the maturity of the US market and also to the potential to come Brexit effect. And also retail investors in France have collected less money, so that gives some room for a different type of investment. So that's the first thing. And in relation to asset allocation, what we see is, well, obviously there's a strong appetite to offices, but there's fewer and fewer products in relation to that. So the new kinds of investments are more in relation to resi. As we all know, there is a lot of residential to be built to match a growing demand for the French inhabitants, and also alternatives such as senior housing, social housing also, and also leisure and hospitality. Well, there's a lot of pressure, obviously, because even if, for example, the French are less present, they still have a lot of money to invest. Plus, as not a real surprise, but a little bit, France is now the most sexiest part of the Eurozone. So a lot of people that were only concentrating on the UK and Germany for their strong economics are now looking at France. So there's a lot of people queuing up to buy products. And there is also less products available, as in a fact that, for example, France in general is not a trading real estate market like the UK, notably London, or the US can be. So, for example, when a core asset is being sold on the market, it goes under the radar like for 25 or 30 years. So that makes the investments a little bit more difficult to be done. But there's still the regions, and there's still also, as I mentioned, the alternatives. So still room to find some opportunities.